Hello traders. I normally receive these questions from a lot of traders. What time frame is best as a swing trader? How you can get a discounted price is a very important question. Also today, not just what time frame best for swing traders, we are going to look at the type of trends you should utilize as a swing trader, the best time frame you should use if you are buying, or how you can get a premium price if you are selling as a swing trader. And also we are going to look at the best risk to reward ratio you can use as a swing trader. You are a trader. There's a question you must ask yourself. Why is market not moving in a straight line? Normally, if you look at the market, this is what we have. Series of up and down, zigzag. Price does not move in a straight line. Even this seems to be straight. But if you're on a higher time frame and we move to lower time frame, you see that this is not straight. And apart from that, you see price always retracing before going up. So psychologically, you must, as a swing trader, it's very important you understand this. So I'm going to explain to you guys why market moves that way and how you can take advantage of this to be profitable as a swing trader. Now, let's say you bought something here and the price moves to $20. Now, you started from $10 and it has moved to $20. That is 100% profit. So most traders, they would like to close the trades because they have made money. And if the majority of them decided to sell, what will happen to the price? The price will drop. So you see the markets retracing, moving back. And some traders, they didn't get in when the price was $10. So most of them, they don't want to buy it at an expensive price. They want the price to retrace a bit to, let's say, price that is favorable, let's say $5 in this case, before they can get in the market. So if most traders that started from $10 and they sold at $20, decided to end these trades, what will happen? The price will fall. That is why you see price retracing most time. And for those that want to enter the price at a cheaper price, immediately gets to this place. There are pools of orders around here. What will happen? All of them will like to buy. And if they decide to buy, the price would go up. The same thing will happen here. Some people entered, let's say the price moves from $20 now to $60. Mind you, some people entered at $30, $40, $55, and some even started from $5. The same thing will happen. Price will like to what? Retrace back. People will sell what they bought around this price or this, and the price is going to retrace. The same thing will happen if the price comes down. A lot of traders will get it because they want it at a discounted price. This is how the market will continue moving. You can see that the price will always what? Retrace back. And as a swing trader, that is the opportunity you would like to utilize. Now price will move back to this area. That means a lot of people will decide to sell what they bought at this price, maybe at $50, $10, $5 and all that. The price is going to retrace. And most times, if you draw a trend line, it tends to obey the trend line, or the price tends to react to the trend line. And as a swing trader, you want to buy at a discounted price using this markets pulling back as an opportunity to be in this market. Now, if you want to be a successful trader, especially if you want to be a swing trader, you must understand the market structure as well. Now, if you look at this as an uptrend, we have higher high here, higher low, higher high, higher low, higher high, higher low. Now, the first thing you have to do as a swing trader is to identify your higher high. Immediately market break this structure here, you have to mark it. Because most times the market will come back to retest this structure that was broken because there's a pool of liquidity around here. Okay, because most traders, they believe that anytime a market break a structure, it will come back to retest it. Why this belief? That is what I explained for you guys earlier. Now, if the market started from here, let's say $5 to $60, people that entered at $5, $10, $20 down to this $60 price level, they would like to take their profit and the price will fall. Now, a lot of traders, they believe that at this particular area, the price might retrace back. One, because there was a structure here that was broken and there's a pool of orders around here. So they believe it will come here, and also the price will be cheaper from them for them to get into the market. And the best thing you should do is to draw your trend line. Okay. And if you draw your trend line, likely the markets might be coming back to touch this trend line. How will you know? You have to mark your higher highs. So most time it corresponds with where the market, the swing low, where the market will come to touch before going up. Now the advantage of this strategy is, one, you know likely where the market might come back to. That is one advantage. You know where the market might be coming back to. And secondly, you are getting it at a cheaper price. Buying here, it will be more expensive for me. Buying here or here, it will be more expensive. So market coming to this price, it will be cheaper for me to enter. And thirdly, your risk to reward ratio will be excellent. Okay. Now, if I'm to buy at this price, let's say I use buy stop here and I want to enter at that price. Let's look at the risk to reward ratio. So I'm entering here, and my stop loss have to be down here. Now you can see the risk to reward ratio is 1 to 2, which is very, very poor. Now, if I utilize the opportunity of market pulling back before I enter this trade, my stop loss will be below here. And you can see the risk to reward ratio is 1 to 8, which is massive. That is one reason you should adopt swing trading. Okay, I know there are different strategies that people use in forex market, but swing trading has been around for a long period of time, and also it's easy to identify. Now, the next question we have to ask ourselves is what types of trends you should utilize as a swing trader. Normally, we have basically two types of trend: uptrend and downtrend. So these are the two types of trend we have. And how you trade this, you approach these guys are different. The first thing you have to do is identify the trend. Now this is uptrend. If we are to identify a downtrend, this is what we'll have. This is uptrend and this is downtrend. Now that you have identified the trend, what you have to do is to join the lows, okay? The swing lows, you have to join them. And here you have to join the swing high. Okay, that is the first thing you should do. The second thing you should do is to mark the structures. Like I stated earlier, that was broken. This structure was broken, and likely the market might be coming back to retrace it. Now we have two confirmation: market touching the trend line and coming back to retest this structure that was broken. The same thing here. You have to mark the your higher high or this structure and capitalize on the market coming back to that area so that you can buy. Now you are getting it at a cheaper price. And also there's a confirmation that there are pool of orders here. And if we look at the main chart, you will identify all this. Now, if you are selling, the same thing applies. You want to sell at a very expensive price. If I'm selling at $10, if you want to sell between $10 and $20, which is better? I believe $20 is best for you if you are selling. And if you are buying between $20 and $10, $10 will be the best for you. You want to take the advantage of market, swing it back to this area so that you can sell. That is what you should capitalize as a swing trader. The next question is, what time frame is best for swing traders? Depend on the type of trader you are. Okay, if you want your position to last for days, let's start from daily time frame. You can utilize daily time frame for your swing trading. You can utilize 4 hour for your swing trading. You can utilize 1 hour 50. Depends on the kind of trader you are and how long you want to last in the market. Okay, that is what you have to look at for first. And also, if you use 4 hour time frame to identify the swing your trend, you have to use lower time frame for your entries. That is very, very important. Let's look at charts. Now, this is 4-hour time frame. So like I said, first you have to identify the trend. If you look at it, this is a downtrend. What you have to do is to join the lower high. Let's use this for example. You have to join your lower high or swing highs. Okay. Now we can see that anytime price touches this trend line, what happens? Goes down. And I told you guys that the first thing you have to mark is this area. This is the downtrend. First, that is what we have to identify, and we have to identify structures. That is lower low that was broken. Now, if you look at this lower low was broken. Like I told you guys, anytime price break a structure, what happens? It comes back to test that structure. That's what happens here. Okay, you can see came back to test it before it started going down. Now the next thing is to mark this latest structure that was broken. You will notice that also price retrace to that area before started falling. Now, like I told you, you have to draw your trend line and identify the structures that was broken. So anytime price touches this area, it's an avenue for you to sell. Now, if I identify this area that okay, price came to this area and there's a trend. Price touches this trend line and there's opportunity for the price to go down. What I will do, I will move down to lower time frame. Let's say 1 hour time frame. This is 1 hour time frame. So here is my point of interest, because I'm expecting something to happen around this area. I'm expecting the price to fall. So if you look at this, it was an uptrend towards this side. Okay, it was an uptrend towards this side. So what you'll be looking for here as a trader on a lower time frame is for this uptrend to change to a downtrend. Now we can see that it's changed here, but I'm not really getting what I want. So let me go to 15-minute time frame. This is 15-minute time frame. So we can see a double top formation here. And what I will do is I will mark the double top formation. And also you can see that the structure was broken here. This structure was broken here. So this is going to be my entry time frame. Why? Because this market was uptrend. It gave us a double top pattern, which is a reversal pattern, and also this structure was broken. For me, that's a signal that the trend line has been respected. So what I will do is to enter this market here. So I will use sell limits, because if it breaks this structure, I would like for the price to retrace back to touch that structure that was broken before I will enter the market. For this is it's easier for me to have good risk to reward ratio. So it's easier for me to have a good risk to reward ratio. Now, if I'm to draw this down, because I know it's a downtrend, you can see that I'm having 9-to-1 risk to reward ratio here, and I can continue extending this because I know the market will fall. The question is, if you miss this first entry, how can you get back into this market? This is the trend we are capitalizing on, and this structure was broken. Look at this structure here. This swing low here. Lower low. Let me call it lower low. It was broken. The best thing you can do is to have your sell limits back around this area. You can see that the price came back to test it and also touches the trend line. It's an avenue for you to be in this market. So guys, one thing you have to look at for as a swing trader, first you have to look at the trend. Is it uptrend? Is it downtrend? Then you have to draw your trend line, either to connect your lower highs or higher lows. It's very important. Then you have to mark your structure. If higher high is broken, you should know that the market might be coming back to test the structure before going up. So you make use of that opportunity. And apart from that, the price will be more cheaper for you to enter at that particular level. Okay, and if it's a downtrend, your lower low has to be taken, and you are capitalizing on market to come back to retest that lower low that was broken and to give you lower high. That is where you can utilize that opportunity to enter the market. Guys, this is very insightful, and I'm going to do more videos for you guys on how to trade swing trading perfectly. So guys, all you can do now is just to hit the subscribe button, like and share. See you next time.